Okay, so what are you saying, people? Welcome back to your favorite YouTube channel. So today, guys, I'll be talking to you about how to trade support and resistance effectively. Now, support and resistance has a bit of a bad name out there because people say it's too basic. Brokers can easily manipulate support and resistance, which is true to some extent, but again, support and resistance is all about the quality of opportunities that you take, because support and resistance is everywhere from the higher time frames all the way down to the lower time frames. And if you're consistently taking bad or average trading opportunities, then your results will only be bad or average. If you're taking the high end opportunities, you'll see a lot more success. So I'll be showing you guys how to spot the good opportunities in the market, things to look out for, things to avoid. I'll be showing you how I interpret support and resistance, how I look to trade it, also using the lower time frames as well. So all of that will be coming up. If you do enjoy the channel, guys, enjoy the content, leave a like on the video. It does really help the channel out. Subscribe to the channel if you haven't done already, and also hit the bell so you don't miss out on any uploads. And also, I will be shouting out people in my next video if you can guess which pair this is and what time frame as well. A little fun thing there to do if you can guess it, or maybe all of you guess it. I have no idea. But yeah, guys, coming right up is the video. Okay, guys, so before we jump into the video, I'm going to quickly go over some ground rules for trading support and resistance effectively, because there's a few things we need to cover, a few things we need to look out for before we jump into some examples. So firstly, we need to understand market conditions, because market conditions can really help either hinder or help push us in the right direction when it comes to our trading results, especially with support and resistance, because there's different market conditions out there. You've got strongly trending markets, aka impulsive. You've got weakly trending markets, lightly trending markets, a bit more corrective, and then you've got consolidation, prices moving sideways. So the market conditions we want to be focusing on is lightly corrective trending markets and also sideways trending markets, because impulsive, heavily trending, like we've seen for some of the USD pairs recently, trading support and resistance can be very, very difficult, especially if you're looking for reversals. For those type of markets, you want to be focusing more on pullback strategies into trend lines, breaking retests, moving averages. You want to be focusing more on looking to simply continue the trend rather than look for reversals. But lightly trending markets and obviously sideways moving markets, support resistance, you're more likely to see a bounce in those type of markets. So just slightly help edging your strategy just by trading those market conditions alone. So we'll be focusing on those type of conditions. Also, we need to understand which time frame we're going to use to identify our bias in the markets, and also which time frame using to enter. You can use the same one for your bias and for entries, but I'll be talking about using multiple in this video here, or at least two in this video. And for this video, we'll be using the daily chart and the half an hour daily for our bias, half an hour for entries. Again, there's different combinations. Sometimes I use daily and hourly as well. Again, there's multiple combinations. You can do 4 hour, maybe 15-minute, hourly, and 5-minute. It's up to you to back test that and see what suits you best. But for this video, we'll be using daily and half an hour. And also we'll be going through with some entries, how to place your stop loss, where you're looking to target, which is very, very important as well. But since we've covered those ground rules, hope you got some notes down. We'll jump into the markets. Got a nice example on pound USD and also an upcoming trading opportunity on pound JPY as well. So we'll be taking a look at that later. So let's get into the video. Okay, so welcome to pound USD. So I'm gonna go through some examples here, show you how we look to trade support and resistance. Again, support and resistance is all about finding your ceiling and your floor, looking to trade between those two levels. And then when one breaks, we look to find a new ceiling or a new floor, depending obviously which one broke. But for this video, I'll just be focusing on how to trade it, methods, how to enter the market, how to develop your bias. If you're looking for more how to draw your support resistance levels correctly, what to look out for, what to avoid, I will do a video on that in the future. Let me know in the comments down below if you do want to see that. But for this video, I'm going to primarily focus on how to trade it. So pound USD has been fluctuating quite nicely recently. I mean, more recent price action will be trending to the downside a little bit correctively, but we've been fluctuating, finding resistance, respecting that, finding support, respecting that. So it's been really, really nice to trade pound USD recently. So if we focus on the price action here, it's going to talk you through how we could look to trade this, how we develop a bias, and obviously how we look to get involved. So pound USD here is straight where you can see a really nice level of resistance there and a really nice level of support, 1.3 at 1.4. so the idea behind this is that we're using the daily to develop our bias, to draw our levels in, and then we can drop to our lower time frames depending on what time frame you're using as your lower time frame for execution. We can simply look to trade between these two levels, wait for daily confirmation, and then all we do is just trade the remainder to the downside. So for example, we had a really nice level here, 1.4, coming back into this level here. All we're waiting for is to get some type of signal, either a candlestick pattern, bearish or bullish candle, some wicks, some type of rejection, indicating to us that from this level, on a daily perspective, we are failing to break through. So we've got this bearish candle here. So simply all we do is we drop to our 30-minute, look at the structure, and we look to trade to the downside to the next floor, because this is our ceiling. And our floor would be this level here, really nice support there, acting at 1.38. So simply just trading the level, and the same thing here, nice bullish candle, we look to trade the same thing to the upside. So the whole idea about using two time frames, one for your bias and one for your entry, is just to maximize reward. Because if we were to take this trade here on that bearish candle on the daily chart, yes, we're still trading the same thing, but again, you can see risk reward 1 to 1.13. so again, it's not the best risk reward in the world, but if we can jump down onto the 30-minute, I'll show you guys how we're looking to trade this. Because a bearish move like so, on just 3 bearish candles on the daily time frame is a trend on the 30-minute. So all we're looking for is a pullback to ride this down into those lows. So if I do get the replay tool out for you guys, give you an example how we're looking to trade it. So we don't trade up here, we wait for the market on the daily to give us that signal. So we miss out on potential manipulation, because again, trading up here, very difficult. If price moving impulsive, price can go break through that and push a lot higher. But now, because we've got daily confirmation, all we're simply looking for is a pullback and then continuation. So pound USD, we're going to wait for the London session around 7 to 8 a.m. right now. It's obviously 9:30, so fast forward a few candles. Okay, so that's still 3 a.m. and now we're at 7 a.m. so we're going to look for an area of resistance, price to pull back into, to sell the market back down. So straight away, I can see here nice area of wicks, so we can see a move to the downside from that, giving us that lower low. So simply, if we can reject this area again, I would happily look to sell and push into that level. So again, this is a 30-minute time frame. That is a really nice entry signal there, nice evening star, stop loss above that, give yourself a little bit of room, and our target's all the way down at our key level. So you can see here, if this trade plays out, we have a 1 to 3 risk to reward, well, 1 to 3.26, whereas on the daily time frame we had a 1 to 1. So if this plays out, maximizing our risk to reward. So you can see we had another test. So again, potentially you can even look to enter another position depending how confident you are in the position, how confident you're feeling. You can always look to maximize your risk to reward like that. If price comes back to the same resistance, gives you another price action entry signal, you can always look to add another position on. So fast forward, just click the play tool. Again, third time, I'm sure that was probably during the Asian session, actually at 5:30, so price will probably be drying up then. So as you can see here, always giving ourselves a little bit of room above that resistance. And you can see price eventually does fall to the downside into that area. So potentially, you could look to add another position there. You're at 8 a.m, another third position, depending obviously how confident you are, understanding that if price does break through that level, all trades will fail, of course. But simply just looking to maximize our risk reward, dropping down to the 30-minute. You can see the bearish trend here, push, pull back, price holding that resistance. Obviously just giving us those lower lows, lower highs, holding that resistance and falling to the downside. So simply just finding that pullback to continue into your floor. And then if price rejects the floor, we look to simply buy it back up and look to buy in a bullish trend. So if you jump back to the daily, you can see here we didn't quite retest that area. So if you can come back there, wait for bullish candlestick, there we go, there's our entry signal on the daily chart. We look for some retracement to take that higher. So again, if I drop back to the 30-minute, So again, for this example here, we didn't quite reach that level there, so you always have to manage your trades. You don't always hit the levels. So for example, say we're holding out for support, price rejects it. You know, if price is coming that close to your level and starts rejecting it, you might as well just close the trade, because there will be some times where price, you know, comes very, very close, pulls all the way back up to your entry, then hits the take profit. There's no need to be in a trade for that long. If we're just, you know, what's that, 10, 12 pips away, and we start showing rejection, just get out of the trade. But if moving on to this one here, you can see very strong reaction from that support, very strong move. You can use a fib, you know, a trend line. Looking for some healthy retracement now. We do have some resistance here, support, sorry, in the 30-minute we could look for a bounce from. Does line up with that 50% retracement. So if you can see some healthy retracement into that level, again, this is the Asian session waiting for London. Okay, so London is now live, so now we're looking for a nice entry signal, nice bullish candle, but again we do have that bearish candle, price could still drop. Looking for a nice shift there. Okay, that was a nice entry signal. I just press play on the second candle there. That was a nice entry signal there at the 0.06 and 0.618, sorry. Nice rejection there. Could look to enter, if we should move this out of the way, look to enter on that bullish candle formation with those wicks. Basically a double bottom there, expecting a higher low to form, and now looking for continuation all the way up into that level. Again, 3.9, you know, maximizing that risk reward on the daily. Probably wouldn't have been a 1-to-1 even. If I can click play there. I think this one does turn out a little bit messy, so maybe it would have stopped you out for break even, depending on how aggressively you manage the trade. Yes, certainly with that wick there. But then you can always look to re-enter, and then eventually you did see that move. So again, it's not always going to be clean, but we're going to get those nice risk to reward moves, and again, high probability trades. Getting our buys from the daily and looking for the continuation. So as you can see, we've broken through the ceiling. Now we're looking for our next ceiling, which would be this area of resistance here. And again, when price does break through a ceiling and we look for the next ceiling, here's a really nice example. We've got our ceiling there, floor over here. We broke through that ceiling. Now we do expect to move into that level. So in this type of example, our confirmation here would be a strong close above that level. So we're not looking for, you know, a wick or anything, just looking for a strong close above. And now since we got that strong close above on the daily, we're looking for our continuations back up into that level there. So drop to the 30-minute. All we are is looking for a retest. Again, this is the Asian session. I'll click play, try to get it to London. Might not have got an entry if that does push on. Yeah, didn't quite get an entry there. That happened during the Asian session, so didn't get an entry there, but you can see the same principle happening again there. And here as well, here's actually a nice signal of what not to do, because here you can see a nice wick to the upside, price pull back down and actually close bearish. So if you're looking for price to break through this level and continue, but you haven't seen a daily candle close, normally it would be a false break. So if I do drop to the 30-minute, you can see we haven't got a daily close above this level yet. If I click play, price can break through our level. Again, people will be looking to buy this on the retest, so they got in that bullish candle there, and then you can see they would have been stopped out with that false break, and all because we've got, you know, that wick on the daily. Yes, sometimes we will get the close above and it will be fake. You know, this will be a nice example, but at least we'll probably get a little bit more of a follow through, and it give us time to get our trade to break even. So I click play on that, wait for a push into this, push into that area. Again, could have got a trade in somewhere around there, nice wick into that level at 1, so you know, kind of London, New York crossover. So say we've got a trade like that and a bit of drawdown here, nice stop loss there though. So as you can see, taken into profit from that level. And then obviously price comes all the way back down, but by here, you know, you should definitely be taking profit and at break even, and shouldn't let that turn into a losing trade. So for this example, it was a nice break and retest, however market failed to follow through. This one here was just very textbook false break. So you can see it does really play out when you do wait for that daily confirmation. We're just simply using the daily for our confirmation, drop to the 30-minute, and all we're just looking for is a push into the ceiling or push into the floor, depending which one is breaking and which one is holding. And if you get a play on this daily chart, see how price develops, we break through this, we push into our next ceiling, which was this level up there, that whole kind of wick area. Then we actually break back below our 1.4 and back into this level. So here you can look for buys to take that forward. Again, same pretty much thing, the push, the pullback, you can get into trades around here when price starts to find support. Also lines up with some support here as well, and then get long. So simply we're just looking for pullbacks in these daily ranges, and just looking from ceiling to floor, again around 100, almost 200 pips. So it's definitely worthwhile to be looking to trade within these ranges, and you want to be avoiding, you know, strongly trending markets such as this over here. Strong push to the upside. If you're looking for those reversals, can be a bit more difficult, but looking for resistance and support here, you're more than likely to see a bounce. So, you know, just waiting for those confirmations. Again, a really nice bearish engulfing. Now do we expect a drop into that level there, drop to your 30-minute time frame, wait for a pullback. Again, this is Asian session, so wait for London. That's 4:30. Coming into London now, and yes, we're in London. So again, we can get entry on that. That's a nice bearish engulfing. Again, you would have your resistance here, price failing to break through that. Stop loss just above, looking for a push in there. 1 to 2, so not amazing, but still worthwhile. Press play. You can see pretty much a retest there. You can look for another entry. Again, another retest there. Again, you can look for another entry. And then price, I do think it does, yeah, it does roll over there. So again, just playing it simple, keeping that range. Again, the most important thing is understanding which market conditions are best to trade in, because taking this strategy into a heavily trending market can be difficult. You can see impulsive behavior like that, difficult to sell at. You want to be sticking to pullback strategy. So hopefully that is useful. I do have a setup on pound JPY I'm going to talk you guys through, and yeah, let's see if we can capitalize on that pair. Okay guys, so welcome to pound JPY. So this is the pair that potentially could give us a really nice move to the upside here, using the same strategy that I've just been talking to you guys on pound USD. So you can see if we look to the left, really nice support here. We can see strong reactions previously, very big moves to the upside here, very big move not too long ago. So we do know that this level is very important and can hold its weight. And so far, looking at its recent price action, it was a little bit messy coming into it, but starting to see some nice rejection with those wicks, and obviously a nice bullish engulfing close there on Friday on the previous week. So potentially we could be seeing a reaction from this like we've seen previously. We do have a nice level of resistance here where previously every time we did bounce into this level, price kept coming, obviously until it did break to the upside. But we do have a high chance of price moving to this resistance. Just above it is a nice area of support, which we did break through, never turned resistance. Price never got the chance to come back and retest it. So could even see a move up into that area, but we'll just look to target this resistance here. Potentially you can look to target that support term resistance as well, depending on, you know, if you're looking to trade that. But we do have some nice confidence looking for that move. So pound JPY does look good. However, we do have some minor, you know, some local resistance on the daily chart, which price is still failing to break through, which potentially could keep the market consolidating, or actually, you know, actually help break us through this key level at 149,400 and see that downtrend here continue. So if we can see a daily close above this level here, that will be a really nice signal saying, yes, the daily shifted from the bears to the bulls, broken through a key level, and on the retest, we can be looking to get long. So far, we've had a few wicks here, price trying to break through. Again, today we've tried to break through, failed to do so, but we still actually do have 4 hours left. But the chance of us turning bullish and closing above that candle is quite slim. But yeah, we still need to see the market show us that, yeah, we're turning bullish and we can actually break through that minor level there. So if we can see a daily close above this, again, dropping down into our entry time frame, drop down to the 30-minute, hourly, you know, whatever time frame you're looking to get to get involved with, we can look for the break and retest of that key level on the daily and look for our continuations. Now you can see here we've had a nice retest on the 30-minute, but it did fail, and that's simply because on the daily chart we still haven't broken through that minor level. So like I said, on pound USD, you do need to watch out for these kind of things where we get a nice break and retest on the 30-minute, expecting price to continue, but from a daily point of view we've never got the break even there as well. So again, this here definitely price just giving that fake out, grabbing liquidity to move in the opposite direction. So do wait for that daily candle close if you're going to look for the break and retest, just to give yourself the best chance possible to trade this. And if we do get a nice trade in there, we're looking at around 169 pips, so definitely worthwhile opportunity there. So yeah, looking at pound JPY long to the week, we'll see how that gets on, but yeah guys, hopefully we can capitalize on that opportunity. Okay, so that is the end of the video guys. Hope you all enjoyed that and found that useful. Any questions, leave it down in the comments below, I'll get back to you. If you did enjoy it, like the video, subscribe if you haven't done already, hit the bell so you don't miss out on any uploads, and I'll see you in the next one.